Banks are absolutely crushing mortgage brokers right now when it comes to rate. We're seeing around at least a 0.5% spread difference from banks versus the broker channel. So, should we all be worried? Well, yes and no. It's my humble opinion that when you see an obstacle that presents itself, there's always an opportunity. And of course, if we had the option, we would all agree that we'd love to be competitive on rate against the banks, but that's just not the case right now, nor will it ever be, in my opinion. I don't see the competition going away anytime soon, which is why in this episode, I'll be outlining three pathways that I believe brokers should be taking in order to serve long term in this business. If you're new to the show, my name is Tom Moffat, and I'm joined by my good buddy, business partner, and co host, Brandon Love. Whether you're new to the show or a seasoned vet, you will get specific takeaways from this podcast. Let the Commission Breath podcast be your tool to grow in your mortgage business. So, with all that being said, let's dive right into it. All right. So there seems to be a lot of panic and worry right now in the industry, and it's totally feasible. And I get it. I was kind of in a negative mindset for quite a while. And I think a lot of brokers are feeling that way right now and feeling kind of hopeless with a lot of the competitiveness that we're seeing right now with the banks. A lot of us are losing files last minute at the altar, and it's just not even close when it comes to rate. But I've kind of turned the page and really have a different mindset on it right now. There's a couple of reasons for that. I mean, the first reason really is in my head, I see there's three different pathways for brokers to go down in order to survive long term in this business. And the reason why I say that is because I don't think the banks are going away anytime soon with what they're doing right now in cutting mortgage brokers. Like some of them are doing it purposely just to undercut us for whatever reason, incentive they have. There's a lot of speculation as to why, but I'm not going to go into that in this video. But what I am going to do is I'm going to go through the mindset I have in terms of the direction I'm going personally in my book of business and the different pathways that I think mortgage brokers can veer towards in order to really still thrive as a mortgage broker and continue to live the lifestyle that you want to, which is why you enter this business in the first place. There's a lot of money to be made here while you can enjoy your career, not being super stressed out. Of course, there's always stressful files that come across your plate, but at least we can mitigate what we have going on with the banks right now. And that's what I'm going to dive into in this episode is the three different pathways. So let's start out with number one, increasing your lead flow. So this was kind of my mindset at the beginning of the year where we started seeing the banks get out of hand with this, but obviously it just progressed and got worse. And my mindset was, if you increase the lead flow, then you're just still going to close at least the same amount of business, if not more. So what I started doing was tracking my conversion rate and really just doing the math and seeing, okay, if I convert 20 to 30% on closed leads, then how many leads do I need to get to the volume goal that I have? So that's what I started with. And then from there, I was like, okay, well, then I just got to ramp up the leads. And then I know I'll hit my volume totals that I'm trying to go for my goal this year. The problem with that is, of course, the more leads you have coming into your business, the more time you have to allocate towards serving those leads. Yes, you can have a filter up front and you can try to filter out the rate shoppers, but sometimes you don't really get that vibe up front. And all it takes is for that client to go to the bank for, withdrawing their down payment or wherever the case is. And that's when the bank rep pitches them and says, hey, you should really meet with Johnny and he'll get you a really awesome rate on your mortgage. That's all it takes, guys. We've all been there before, getting last minute text, last minute call, email, whatever the case is, where the client's saying, hey, like I just got offered this by my bank. Can you match it? It's a shitty feeling. It sucks, but we just kind of have to agree that we're going to see it more often and it's not going away, especially if you're sticking to this first pathway is increased lead flow. So deciding to do this, it can be a great strategy because of course, the more leads you have, the more business you're going to close. But like I said, you're going to spend more time on files and more time in the business because you have to seep through all of the leads and you're just working with more clients. So that's the downside to it. The upside is that you can possibly maintain your level of business and really change nothing else because you're just going to accept that you're going to lose files. So I was thinking this way. I still am obviously concentrated on increasing the lead flow, but what I would also do to that is I would make tweaks in your business. Instead of just trying to increase the lead flow, try to change up your process as well, because you may as well try to make it stickier, the client journey that is, to retain as many clients as you can and not lose as much business. So we've talked about this on past episodes, but what I would do is just do a revamp of your client journey literally every month. At the start of the month, just go through everything on your client journey, see the tweaks that you can make, look through some of the files that you lost and figure out, okay, like why did it go that way? Did I not have a proper screening up front on my discovery call? Is there something I can add in my client journey that makes it stronger and stickier and prevents clients from even wanting to explore that option? So that's what I would do is I would try to add more value adds throughout the client journey as well. Like that's why I created that drip campaign originally was inspiration from the Mudrick episode. I was like, you know what? Why don't I create this drip campaign that's going to be automatic? I don't have to think about it. It's not adding more time into my day to retain these clients. Have this drip campaign that has value adds in there, shows my face more on video. The clients get to know me a bit better and they really get to understand some of the value adds. Let's go through some of the examples that we can use. So, as a value add, there's so many you could include, but the main ones that a lot of successful brokers are using would be your custom budgets. Like if you're not doing a custom budget at this point, like you have to. You can't not do it anymore. It's becoming the standard, it's becoming the norm. If you're not doing custom budgets, it at least sets you apart from the banks. They're not doing it, they never will. So please do it. Then you have one point of contact. That one's kind of a basic one where you're basically saying, hey, I'm going to be your one point of contact. I'm here for the life of your mortgage. At the banks, they have high turnover. You might not get that person, that representative next year because they're just kind of gone. And if you ever have questions on your mortgage, it can be kind of a pain to really just figure out who the person is to ask these questions to. So that will work. It'll help, but it's not going to be a game changer in terms of retaining these clients because, if one of the banks is offering a 0.5% rate lower than what you have, I would argue that value add is not really going to stand up against that, but it's a collection of all of these value adds that are really going to help. So some other ones would be annual review calls. Now you can turn this into a different name and make it a bit sexier from a marketing perspective and explain what your annual review calls are going to be about. So, one avenue that I was going to go down was niching into being the go to source for showing people how to pay off their mortgage quicker. So, if someone wanted to get a mortgage and they needed a mortgage, but their goal was to be mortgage free, I wanted to be the guy that honed in on that, niched into that, and was the expert on showing people how to pay off their mortgage quicker through advanced strategies. I would recommend doing something like that. Another thing would be rate insurance. So we've talked about this in previous episodes. I'm not going to dive deep on this one. There is another episode going over that in detail, but rate insurance is essentially just explaining that any rate decreases prior to closing, you will lock in on that rate for them and guarantee that that rate's going to be the absolute lowest up until closing. And then for variable rate clients, you're monitoring rates ongoing after closing and presenting any opportunities that come their way and any saving opportunities that you can make for them. So that's rate insurance. That's actually a big one that I would include regardless of who you are and what kind of operation you run. Then you have another one that can be leveraging your team. So maybe you build out a team of specialists. Maybe you have like a financial advisor who's your go-to and you can pitch it as, hey, you know what, like a fee-based financial advisor would normally charge, I'm just throwing a number out there, $500 an hour or $1,000 an hour. You get a free hour with my financial advisor as part of working with us. I'm just throwing an example out there. You can do this with different professionals and make it more of like a white glove type of business. So that's something you can do there. I'll stop at the value adds there, but really to round out this point is if you increase your lead flow, improve your client journey, hone in on that, make it stickier for these clients, add in the value adds and improve that over time, then you will see some results. You will maintain your business, if not increase it, but it does come with some downsides. And the downsides are that you're going to spend more time in your business because, of course, you're trying to increase the leads just to keep more clients and not lose them to the bank. So that's number one. Number two, you can focus on specific strategies. So we had on Zach LaFuedo on a recent episode where he was talking about a few strategies that he's focusing in on, and it's really improved his business. And I've seen it too with the Strategy Hub community. A lot of them are doing really well with the rental cash scamming and some of the other stuff that they have going on. They have so many strategies. I haven't myself done a deep dive on them, but if I were starting out or if I wanted to focus on a strategy, I would probably pick one and just go all in on it and try to simplify it as much as possible. There's so many different strategies you can use. I think leveraging the one that you can do all year round, regardless of the market, and that you can simplify for the client and it's not as complex. That's the route I would go. And I contemplated going with this point. Point three is the one that I'm actually pivoting towards as well. But number two for this one, I debated going this route, but it requires a lot more time invested to learning the strategy. And I just don't have the time right now with Tango and also my newborn, household's crazy, not to use that as an excuse, but I just don't have as much time as I used to in the mortgage business. So for me to learn cash damming as an example, it's just not going to be an option. I just know it's not going to happen, at least effectively. So I glossed over this pretty quick and I decided, okay, I'm not going to go that route. But for you listening, this might be the best angle because if you think about it, if you're niching into rental cash jamming and you're pitching this to people saying, hey, if you own a rental property, I'm going to show you how to make your primary residence tax efficient, leverage the CRA's money. Like there's so many hooks you can use with that. I think that's one that would crush. And there's a lot of landlords out there who are cash flow negative right now based off of them having variable rates or they can't increase their rents too much because they live in Ontario or BC. There's many routes you can go with the cash damming, and that's kind of one I would really focus in on if I had time. Another one would be reverse mortgages, which nobody talks about. I think that's a really good opportunity, and it's something that I'm actually currently exploring, not from like a single strategy perspective, but from niching in on a type of client. That really leads me off with point number three, pivoting to B slash private business. So if you asked me a year ago, I would say forget it. I am not going this route at all. But the reason why I am is because of no competition. I don't want to say no competition, but there is far less competition in the B world on the private side because you're only competing against other brokers. And if you think about how many times you've competed against another broker, it's very far and few between. Like I've hardly ever competed with another broker, not because I'm the best, but because it just never really comes across my plate. It's usually the banks. I don't really come across another broker working with the same client. It's very, very rare, especially in the B world. There's not many brokers focusing in on the B business. And that's where I think the opportunity is. And you've probably heard it before. It's nothing new that you haven't heard before. But I think if you really review the B world and why it's an opportunity, well, first, you're not playing in the same sandbox as the banks. So you're not competing on rate. You don't have to have those dreaded conversations with clients all the time about rate. Like, I don't know about you, but I'm tired of it, to be completely honest. And I actually did a review on my files closed thus far this year. And I was like, okay, I'm going to pick out the top three files that I enjoyed the most, like that I came away from feeling satisfied, just overall a good feeling. And it was a huge surprise to me. All three were debt consolidations on the B side, where it wasn't like this complicated file that I had to spend like 5 hours trying to find a solution with like unique financing. It wasn't anything like that. It was, they could have been A clients, but they either had damaged credit or they had a lot of outstanding debt where the ratios were pushing to the B side, which we're going to see a lot more of, by the way, at renewal time with all of these renewals coming up. So that's where I'm heading. I'm trying to figure out, okay, where can I find this business to get more B files and not so much private. I don't really care to go the private route, but more so that the B business, and we can use the graduation programs with some of these monoline lenders where we can graduate them to the A side after 1 or 2 years. If you do the math on how much you get paid, you actually get paid more. You're doing a service to the client where you're relieving cash flow for them. You're making them feel great from like a relief perspective. You're increasing their credit in some of these situations. Like overall, everyone's feeling great. You're never talking about rate against the banks. So in an ideal world, most of my files would be debt consolidation, either credit impaired or high ratio files. So to wrap this up, if you're out there and you're struggling and you're just fed up, you're throwing in the towel, and maybe it's to the extreme, you're thinking about leaving this business because of how it is, maybe just do a second thought and a deep dive on your business, audit it yourself, figure out, okay, who have I enjoyed working with most this year? Maybe you go with option number three and you try to pivot to the B world, or maybe you dive into some of the strategies Strategy Hub is offering and teaching brokers. Maybe you just test it out, see if there's a strategy there that really speaks to you that you would like to go deep on. Cause I know a lot of them are doing well with those strategies. Or maybe it's one, maybe you're like, just fuck it, man. I just want to like do the same thing I'm doing right now, not change anything in my business, just ramp it up, clean my client journey up, and just make it stickier for clients. Like I think all three options are great. It just depends on what speaks to you. Maybe you're someone listening right now that's like, you know what, Tom, I'm not even really being affected right now from this bank competition because I'm in a small market where your clients aren't really going to the banks and competing on rate with you. If that's the case, then carry on, like all to you. I think that's great. Maybe your mortgage file sizes are smaller, which is the downside, but the plus is that your closing ratio is probably a lot higher. So kudos to you. And maybe you're someone that's in a big market in Toronto, Vancouver, wherever. Maybe you go and niche into a smaller market like Brandon did that. He's in the Burlington, Milton area in Ontario, which are fairly big markets. And he decided to niche into a smaller market in Ontario, which is like 2 hours away from where he lives. And it's done really well for him. He's still experiencing some competition with the banks, but not nearly as much as some of these Toronto markets, right? So maybe you do that, right? There's so many options. So I'll leave it out at that. My last thought on this is bank competition isn't going away. I truly do believe it's going to be here for the long term, forever, for that most part. I don't have a crystal ball. I don't have the insider scoop on what banks are doing. It's always been there, but it hasn't been this bad. Maybe it lightens up a little bit when the banks are at their fiscal year. Maybe it doesn't get better. Maybe it does. Who knows? But all I can say is try not to get too down on yourself and your business and where things are at. I know it's tough. I've been there. I'm there right now with you in my business. It sucks losing files. It's probably the worst feeling ever. But I think if you just recuperate, recalibrate, take the weekend, maybe just review everything you have going on in your business and try to pivot to one of these options. So I hope this helps. If you have any insight or input as to what I talked about today, if you feel different about any of this, please let me know. I'm always open to hearing your opinion. Cheers.